Hello everyone, my name's Dean, let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is December 21st, 2024. And this move that we've experienced in the cryptocurrency market in the past, I'd say 24 hours is not what most people think. Please be very careful. There's a high probability that this is an intra-wave correction, i.e. the general trend of the past few days is going to resume, and it's going to actually resume in a way that's that much more impulsive, that much more sort of intense, and a lot of people are going to be caught on the wrong side of that trade. So I really want those of you who watch this channel and anybody who comes across this video to understand that is a high probability read, and I'm going to explain exactly why. Guys, I hope everybody's safe and doing well. Let's get into it. Let's not waste any time. Let's look at Bitcoin on the daily time frame, okay? And let's break this down. Okay, so you can look at this in one of either two ways. All right, and a lot of people are posting this, and it's not that difficult a read, okay? Bitcoin on the daily time frame is in, or has been in, a rising wedge for probably the past month, okay? It's about a month, give or take, okay? So that is where we're at. And what happened at the top here, we know, we had a rejection at the top of the rising wedge all the way down and through the channel. All the way down and through the channel. That's important. There's another way to look at this. Peter Brent on Twitter posted this. And actually, I've looked at this before. I initially had this. You can look at it as a megaphone. I don't really like that read as well, right? Because these... if you see a megaphone, it tends to be like this, like we have below. As you know, the consolidation that we had earlier before this breakout came out of a falling megaphone pattern. Obviously, charts can show many different ways. And if this indeed were the case, that cone structure, that conical structure right there that I just drew, is actually more bearish than bullish. This one, here, let me just show you. This one that you have down here, the big one, it's bullish. Why is it bullish? Because it's down and to the right. Typically, patterns that slant down and to the right break up. Whereas patterns that are up and to the right break down. Okay? So that's just what you typically see. Again, we're talking probabilistically. That's what you see. You can go on stock trader, or there's all these sites where you can check the probability of patterns breaking up or down. So if you look at it that way, which you can, it's either way you'll come to the same conclusion, and this is what I really want to drive home. So first, let's do the first thing, right? Look at it in terms of a rising wedge. And this is all pattern analysis, but if you look at it in terms of a rising wedge, you broke down from it, and all you're doing now is what? Retesting lost support as new resistance. Boom. Which you would expect because, as I said, this pattern is a 30-day pattern. Price has spent long enough in this pattern for the lost support to need to be retested as resistance before a continuation of the move, okay? This is 30 days of lost support, broken down, retested, and that's it. And you actually, here, if you wanted to be bullish, this is what you would have liked to have seen, okay? If you want to be bullish, rather, this is what you'd like to have seen. A reclamation of the level, and then a retest and continuation. What did we get? We got a move up and another rejection at the level, and now we're struggling at that level, do expect a continuation. So that's one way to look at it, okay? Again, I have my opinions and I draw my conclusions, but I like analysts, and this is what I try to do, who show their work, right? Instead of telling you what's going to happen, I want to tell you why I think what I think. And then you can draw your own conclusions, which you should be doing anyway, right? Do your own research, make your own calls. And so if you look at it in terms of that sort of conical shape that I drew before, right, as Peter Brandt posted, this is also okay. And let me just temporarily do this. Let me hide this temporarily, yeah? Just so we don't get confused. How do I do that? I know how to do that. Hide. Yeah, there we go. Okay. If you just look at it in terms of this shape, whatever it is, a cone or a megaphone, it's bearish, one, just like I said, because it's kind of slanted upwards. Two, because we came down to the bottom of the channel or the shape. We came up. It's just another form of channel. It's just not completely straight on the top. And what do you guys know about channels? I keep saying this on this YouTube channel, that any big structure, it's not just relegated to channels, but any structures, in order to leave the confines of that structure, you first need to retest the midline. You have three aspects of any channel. You have the support, you have the resistance, and you have the midline. The midline must be respected, and it's resistance when you're below it, support when you're above it. So what you're seeing here is essentially the midline, or the heart line, as some people call it, of the channel, right? Past 30 days, this is the median price. That's where that's the fair market price of Bitcoin for the past 30 days. If you average out, I believe, if you take all the buys and sells, median, and you cut it in two, you'll get that price. So it's important. There's a reason why, there's a mathematical reason why we have to retest that, because it's like, okay, fair market price for Bitcoin, going once, going twice. Anybody want to buy at this level? Anybody want to sell at this level? All right. That's why you retest midlines. And this is essentially just a retest of the midline. And you know what happens. Once that is satisfied, then you can do what? You can leave the confines of the shape. You won't just, if you pay attention, you study charts, and you want to be circumspect about what I'm saying and do your due diligence, you'll open up your watch list and you'll see the very same thing throughout the market. You'll see versions of this, right? Either you can look at it as a rising wedge that broke down and is retesting lost support as new resistance, or you can look at it as a larger pattern where you're retesting the heart line or the midline of that larger pattern and going down. Now that we've established my reasons for looking at the past 30 days as or looking at the recent price action of the past couple days being bearish vis-a-vis what we've done in the past 30 days, I want to show you the subsequent high probability move. If indeed I'm correct and we lose the confines, we lose the integrity of that channel, well, look at where our next logical support is. Look left. What do you see? You see a big rise from this perspective wave 4, or like whatever this consolidation was. You just had a lot of green. There's an imbalance in the chart. It would need to be balanced by red. That's it. It's a very simple read. And if you look at this, you always look left for where your support would be, yeah? So like if you have a consolidation here, imagine that when the price comes down, it's going to find support at least temporarily. Well, when you look at this, what do you see? This is why I said there's always a technical reason for why I make my conclusions. And again, I'm trying to substantiate why I'm saying what I'm saying in the posts with, the alarm bells and stuff like that. It's not just for nothing. And that's why I say they're high probability reads. When you come in this region, when the price comes in this region, it's a free fall. There's no support level. That is what I call cascade of liquidations, right? But we do have a probabilistic support in this region right here. And there's two reasons why I say this. I'm thinking. So one, the midline again of any channel is just as serious, just as integral to the structure of the channel as the support and the resistance. So when we come down here, the midline of this multi-year channel, which this is, it's a multi-year channel. Sorry. Is it a multi-year channel? Let's see. Yeah, it's a multi-year channel. I'm not going to zoom out just because I want to focus on this analysis. So the midline of this multi-year channel is going to provide support because we're above it. So I think with a high degree of probability that when we come here, we will experience a relatively large bounce. Reason number two why we get the bounce. Now, again, please understand, now we're just getting greedy and fancy with our analysis. The analysis that you should take home is that once we lose this level, it's good night, Irene. So what you want to do is de-risk. What you want to do is get in shorts or just be in cash and wait. And please understand that if Bitcoin's going to free fall, your favorite altcoin, no matter how much you think it's great and fundamentally sound, is also going to go to hell. Okay? Very likelihood. Very high probability. It's unlikely that anything will escape the carnage of this drop. Don't think that your altcoin will magically do that, right? If the whole market's going to hell, so is your favorite altcoin. So are all your bags. That's why the best thing to do, this is what I've been yelling for the past few weeks, sell. Not financial advice, but it's just what you do when you see a massive move. I'm not talking about a little bit of a correction, and a lot of people who are not that great at reading charts are going to tell you, oh, the dump's over, buy. They're buying here a lot. They're buying with size. These influencers, they've got enough to make sizable purchases, whether it's spot or futures. Futures are just going to get liquidated more or less. But if it's spot, they're just going to lose quite a bit, right? Obviously, they'll get it back, but, their initial buy-in is going to be all the way up here as the price comes down here. You don't want to do that. You don't want to get caught underwater. So that's why I'm saying de-risk. If I happen to be wrong, and there's always that probability, then there are certain things you can wait for in the charts to prove that you're indeed in an uptrend, and that is invalidated. And that would be essentially simply enough to regain this level and retest it as support and move on. Simple. But if that doesn't happen, and it doesn't look like it's happening on the small time frame, it doesn't look like it's happening on the large time frame, do expect a massive sell-off. And again, I will repeat this, and I don't think I'm being dramatic. We've never seen this before. This is not your run-of-the-mill drawdown that they keep telling you on social media. This is a drawdown the likes of which the crypto market has never seen. The liquidations that occur therefrom will also be unparalleled. I've said it before, and people think I'm being dramatic. Exchanges will go down from not practicing good risk management in these market conditions. Institutions that are over leveraged and overexposed will also go down. Hedge funds may also go down. exchanges that you use may not be online as the cascade of liquidations happens. Because think about it. So many people are convinced that we're in a bull run. They are convinced that Bitcoin since 16K has been in a bull run. That's their definition of a bull run. To them, what I'm saying is unconscionable. It's inane. It doesn't make any sense. We're in a bull run. You don't get that kind of move, 100% retracement of the Trump pump in a bull run. It doesn't make any sense. So they can't see the obvious. Please understand that. My thesis that I contend is that we have yet to enter the bull run. We're right around the corner. The bull run starts once we hit this level right here. Okay, and I've explained that before. Check out the video, The Great Crash of 2024, also on the channel. So that's the idea. I would be very, very careful with this move. And it's the weekend. What do we know about the weekend? Probabilistically, and this is what we do, right? We're not gambling when we're trained in chart analysis and, studying markets. We take calculated risks. And the calculus is, on the weekends, you tend to see sideways and downwards price action. So be very, very, very careful at thinking that we'll have the liquidity on a weekend to regain this level, retest it, and then go up. The longer we stay here, the more likely it is that we break down from it. And the fact that we're hovering and not doing anything is bad news. Bad news. Okay? So that's pretty much it. And look, to substantiate all of that, go to the US dollar currency index. And what do we know about the US dollar currency index? It is inversely correlated to the Bitcoin price. Okay, so if the USDXY, the dollar, the underlying asset of all of this, is going up, Bitcoin and risk on assets, whatever you use dollars to buy, is going down in value. Yeah. So when we look at the chart of the US dollar currency index on the 4-hourly time frame, first, for those of you who are new, welcome. Thank you for subscribing. We have a very consistent pattern here on the US dollar currency index indicator. You have this resistance that we've been in, we kind of been in a channel, but hitting that resistance quite consistently, right? Once, twice, 3 times. Do you expect a 4th time before rejection, right? Because essentially, we're looking for the pattern to continue until it doesn't. And the only time it doesn't is when we get a proper rejection from it. And so basically, this is being targeted, the top of this channel here, the top of this resistance. So we kind of been matriculating there, yeah? On the smaller time frames, it's quite clear. And I said this before. I said this last video or 2 videos ago, where we were here. I said, do expect an ABC correction. And I said, and I'm not going to be obnoxious and like splice the time I said, like, just believe me, you can go and look at my previous videos. I did say this. Why did I say that? I said because this correction, I remember we're right here-ish, is insufficient for a wave 1 correction, because wave 1 corrects to a minimum of 0.382 Fibonacci retracement level of the preceding pump. And if you measure that with your Fibonacci retracement tool, you'll see that this has yet to hit the 382. So I thought, okay, whatever happens, we're more likely not to come down. This move down was that little move up that you saw, the retest of previous support as new resistance, right? US dollar currency index goes down, Bitcoin risk on assets go up. Now what happened? Well, just as you thought, now that it's finished and we got our golden pocket retracement, if you take your Fibonacci retracement tool from the bottom to the top, what do you see? You see that this ABC correction that you've been in right here has hit its target. Wave 2 of an impulse typically comes between the 0.5 and the 0.618 in a sharp correction. This is what we would characterize as a sharp correction in Elliott wave analysis. And now you get a base and you should expect, more likely than not, a continuation of this trend. Again, high time frame, small time frame. This is telling us that the US dollar, relative value of the US dollar, is going up. If that's true, then we should expect a massive move down in Bitcoin and the rest of the cryptocurrency markets. You should not be bullish when the dollar is going up, okay? In that same way, when you look at the Bitcoin dominance indicator, another indicator that is quite reliable, typically when Bitcoin dominance is going up, we're bearish. When Bitcoin dominance is coming down, we're bullish, okay? Bitcoin dominance right now is going up, and it's in a trend that I don't see necessarily stopping anytime soon. I mean, do you? Let's zoom out for a second. Let's gain a little bit of perspective. So what happened in Bitcoin dominance was that we had this corrective move that I would consider an initial break of structure. You could call that A. This I would consider a secondary break, okay? So this was the lost support, now turned as new resistance, and we came in and we wicked above it. But what have I've been saying, what have I been saying on this channel is that in order for Bitcoin dominance to eventually turn down and for the bull market and alt season to start in earnest, you need to effectuate a consolidation. You don't change direction at a whim. Look at your charts and prove it to yourselves. Do not take my word for it. Any and every time price action changes direction, prior to the change in direction, you need to put in a consolidation. Wyckoff explained this. A consolidation from up to down is called a distribution. A consolidation from down to up is called an accumulation. Do expect an accumulation to be put in, i.e. a sideways consolidation at this level before our ultimate move down. And that can take some time. Look, if you look at how much time this distribution took, it took 14 days, okay? Look how long this accumulation took. It took about 8 days, 9 days. So do expect for Bitcoin, for the Bitcoin dominance to put in some kind of lengthy consolidation. And I wouldn't be surprised if it was a couple or a few weeks before alt season starts in earnest. Too many people are analyzing this chart and correctly saying that we are at a level where Bitcoin dominance should turn, but they neglect to tell you that that may take some time because these are ocean liners, right? These trends don't change on a whim. They need time. So that's what I'm seeing in the Bitcoin dominance chart. And the last thing I'll say, back to Bitcoin. On the smaller time frames, I was watching what happened yesterday, and I wasn't sure exactly what was going on, and I was actually with a client, one of y'all, he's watching probably, and I said, you know what, I think that we're gonna come up and consolidate here, and it's going to be kind of one of those, old resistance or old support turned into new resistance, but I thought we were going to put in a channel here. I didn't know really what was happening. Then I looked at it and I was like, oh, it's quite clear. This is a lower high. This is a lower high. We've been in a downtrend since 108 impulsively. And what you can see is you put in a wave 1, wave 2, wave 1, wave 2, wave 1, wave 2. Basically, you're putting in an impulse, correction, impulse, correction. These aren't, let me backtrack. These aren't pure impulsive waves. These are corrective waves, but they're impulsive in nature. There's a distinction. I don't want to get too much in the weeds, but you can consider them corrective impulses. That's the best way I can explain it, without getting too in the weeds. So let's just say it's kind of like a wave 1, wave 2 situation, but it's not, because you don't get wave 3, 4, and 5. Okay? So wave 1, wave 2, wave 1, wave 2, wave 1, wave 2, wave 1, wave 2. That's what this is. Because if you measure this, you see that that's an impulse. and that is a counter. That is a lower high. That is a intrawave correction, as it were. This is the trend, and each one of these is the counter trend. Sorry. Let me say that. Trend, trend, counter trend. Trend, counter trend. Trend, counter trend. Trend, counter trend. So you tell me what's likely to happen, right? And you can see quite clearly there's a resistance here and there's a support here. This is just going to continue, more likely than not, based off of the pattern. We only deal in patterns and probabilities, okay? And when you're looking at price action, it's telling you a story, and the story is this is going to continue until there's no more support, right? The only thing that's keeping this from shooting down is this support line right here. Every time you come down, there's a support, 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 support. Do you see any more such support down here? Probably maybe one here. Okay, it can continue, but the idea is the general trend is down. So it's kind of silly to think all of a sudden, uh, you know, without any rhyme or reason, you're gonna break this trend, retest. No, it's unlikely. So please just look at the charts. Read the charts. It tells the story. The more you look at it, the more you will be able to discern with clarity more or less what's happening. And then, sometimes it's hard to say exactly how it's going to happen, but you'll get the general gist of it. And at least for your big buys, a high time frame, whether I should buy or sell, you'll be able to discern what the charts are telling you. And you won't have to listen to some bloviating influencer who wants you to buy at every, at every turn. It's just, I mean, literally we're going into one of the biggest dumps ever for Bitcoin. I mean, at the end of the day, when you're looking at it, you're talking about a move taking you down all the way from 108 to, from 108, right, which was the top of this move, all the way down to 70 or 66. That would be a 40% move, okay? But it's not always the percentage, because it doesn't always happen in a fell swoop. But like, if this happens in the way I think it will, this will be really bad. This will catch more people off guard, and that will trap more people, and this will be even worse. Don't be party to that unless you're short. And this is how I'm going to end the video. So I have developed a partnership, an official partnership with an exchange, and I've been doing this analysis for many years, and I've never had an official partner. KCEX is now my official partner. It doesn't mean that's the only exchange I can use, but that's the only exchange I'm using for now because I'm enjoying it. And pin comment below. Like I said in last episode, they're giving out decent rewards. So if you want to trade on KCEX, do it with the free money that they're giving out. They are offering a lot, hundreds of dollars, depending on where you're from. Like, I think US and Canada, we can get like up to $1,000, but everybody's a bit different depending on your market. But just, it's free money. And if you want to trade, as you can see, I'm trading the market short. I'm in a bunch of shorts right now. HBAR, Dogecoin, XLM, and ADA. Right now, I'm up a bit. But I just started on this exchange. I'm new to this exchange, so I just used the free money that they gave, and you can see they gave me the bonus, just like you would get if you signed up, right? And I traded a bunch of things short, and I'm up a little bit. So please take advantage of this. I mean, that's one of the great things about crypto is there's money everywhere, and you just have to take advantage of it. And one of the ways that you can take advantage of the free money is by signing up for new exchanges. They have generous rewards, and the rewards are given if you sign up, you KYC, if you put in your first trade, all that stuff. And let me say, I'd be remiss if I didn't say that this is clearly quite advanced for my advanced traders, not for just anybody. If you have no idea about using leverage and trading futures, you can try, but be very careful putting your own money. You go ahead and use the money that they give you to play around with it, but be very careful. I do not want you to take a bad habit into the bull market. If you don't know what you're doing, when the bull market comes, please just stay with what you know. Don't start getting involved in this. This is only for people who know what they're doing, right? To actually use their own money on. But again, if you're new to this, go ahead and feel free to use the money that they're giving you to play around with it, short the market if you'd like. Just try it out. All right, so that's it from me, guys. I hope this was helpful. I hope this was useful. Like, share, and subscribe if you got value. And consider buying me a coffee at the pinned comment below, either by Venmo or Cash App, or by sending me some Litecoin. And also understand that I am currently still open for crypto portfolio consultation. I have a few spots left, and that's where I personally go one-on-one with a small number of you every month for 1 to 2 hours individually, right? So not like a group thing, but individually. And we can balance your portfolio up to 5 assets, and I give you specific entries and exits per month for how to trade your portfolio and maximize your gains. And that's about $150 on the Buy Me a Coffee website. That's also at the pinned comment below. Again, limited spots available because there's just so many hours I can spend going one-on-one with you all every week.